Alright, so today's lecture, we're back with the server. Today's lecture is on time frame correlation. So this is just a video I want to make. It's gonna be like a short ass lecture. Cause when I first started trading, I had a lot of I was kind of confused on how to use the different time frames, and that's because I never really learned how the different time frames are used if you're trying to trade, and that was a big struggle for me. And I didn't figure that out until uh, I started trading, and then I had to figure it out myself. So I just want to make a short video on how to use the different time frames, uh, how I use them personally, and high time frame narratives, and then low time frame executions. So this is what time frames I recommend you use. So we'll start from the highest and go to the lowest. So the first time frame is the daily time frame. The second is the 4 hour. Third is the 1 hour. Fourth is the 15 minute. Fifth is the 5 minute. And the sixth is the 1 minute. So if you're just trading regularly, you should be like okay for the most part. Um, you can also use the 30-second charts and the 15-second charts, but if you're a beginner, I don't really recommend that because it can be a little bit fast paced when you first look at it. And also, you do have to pay to actually access it. So, if you're first starting off, you don't really have to worry about that. But those are two good time frames to also trade. And now let's talk about how you can actually use these different time frames. So, for the daily time frame, you can look at previous day highs and lows. You can look at different candle closures. And you can also look at daily PD arrays. So I'll make a separate video on the candle closures of the daily candles, but basically previous day highs and lows are pretty good draws on liquidity, as we learned in the last lecture. If you guys didn't catch that, just go watch the video. I posted it. But yeah, so as you see, previous day highs and lows, it'll just be the wicks of the daily candlesticks. Those are good draws on liquidity that you can have as like a target. And then high time frame PD arrays as well. So like maybe a daily fair value gap, daily order block. That's more for like, I'd say a bigger overall bias for like a larger move. And then if you want a maybe session bias or just a bias on the day, you could scale down time frames, which moves us on to the 4 hour. So the 4 hour is pretty similar to the daily, but it's just a smaller time frame. So it gives us a bias for an execution on a smaller time frame. So something you can look for is 4 hour PD arrays. So like a fair value gap. So in this picture right here, you can see we have this 4 hour gap. We tap into it and then we trade away. And then you could also use 4 hour highs and lows. So in this example again, we do trade down to this 4 hour low. And it's pretty useful for framing the day, I'd say. So maybe targets, and even for the whole week, because honestly, some of these, for example, this big displacement leg, it's more unlikely to reach to, let's say, like this 4 hour gap in this day. So it might reach into that in the next day. So it's pretty good for like framing maybe daily bias for like the entire week. So every day you can use the 4 hour, and some of the PD arrays can be tagged into on another day. And then the 1 hour is basically the same as the 4 hour, but just a lower time frame. And it's pretty good for session targets, draws on liquidity, and also again high time frame PD arrays. So everything 1 hour and above, it's really just good for framing a higher time frame narrative. So getting a good idea of where the higher time frame wants to go and what we can expect price to do during that day. So the 1 hour, I really like using it because a lot of the time, a lot of the targets on the 1 hour are more likely to get hit during the session rather than the 4 hour, because sometimes the 4 hour makes pretty big moves and it's pretty far away. So going down even more, we have the 15-minute time frame, and something I love to use for the 15-minute is possible points for price to manipulate during market open. So in the sessions video, we talked about 9:30, a lot of volume coming into the market, and we get some type of manipulation. So I really love using 15-minute for that, because 15-minute highs and lows and 15-minute PD rays, so like fair value gaps, they're not as like far away from price or as large as 1 hour and 4 hour gaps and draws on liquidity. So it's relatively close to price usually during market open, which is why I like to use it for the Judas swing that we get, which I'll talk about in another video as well. And it's also good for session targets and lower time frame execution and draws on liquidity. So like if we wanted to, let's say, enter on the 1 minute, we can use a 15-minute high or low as a draw. And then going down even more, the 5-minute, it's a lower time frame, and this is where we start to focus on execution. So 5-minute, we really do just want to use for execution. You can use it for draws on liquidity and PD raise as well, but more for scalping. So you can use like 5-minute highs and lows, 5-minute fair value gaps, if you wanted to take a trade on the 1 minute, for example. And the 1 minute, the final time frame I'm going to talk about, it's ideally where we want to execute. And you can also kind of use 1 minute highs and lows as a draw on liquidity, but we do want it to be like very prominent highs. So either way, it would be a high on another time frame anyway, so we wouldn't really look at that actually. But now that we got all the time frames out of the way, I'm going to show you a live chart example on how to frame the higher time frame and then move on to a low time frame execution. All right, so I'll start from top to bottom. So we're on the daily time frame right now, and this is like an example of how I would frame a day using every single time frame. As you can see, I have all the ones I mentioned favorited. So we start on the daily. What do we have? We have previous day highs and lows right here. So this is today. So we can mark out the previous day high and then the previous day low. And then we can also mark out this day's high and low as well. So if we mark that out. So as you can see, the previous day, we took out the previous day's high. So June 22nd, we took out June 18th high. So what can we sort of expect? Well, we can kind of expect for price to go down because we took out this high and we failed to make a closure. So that's one way you can use the daily time frame. So that already gave me a bearish bias. And then if we go down to the 4 hour, let's look. So 4 hour, obviously we want to look at the gaps and maybe fair value gaps being formed so we can get a higher time frame bias. So again, here we swept out these highs. There's like no fair value gaps really getting respected. We have this inverse fair value gap. So that can also help us frame a bearish day. So you kind of just want to look at the 4 hour as, okay, what high time frame PD rays are we respecting, or do we have any liquidity sweeps on a higher time frame? So on the 4 hour, we swept out these highs and then we inverse this gap. So that is how we can use the 4 hour. If we scale down to the 1 hour. So for the 1 hour, I don't really like framing out the day using the 1 hour, but I kind of like using it as draws on liquidity. So for example, since looking at that, we could make a prediction that we're going to be bearish. Let's think, okay, where can we target if we were bearish? And that's where the 1 hour comes in. So notice how we have these prominent lows resting here. And we also have some unfilled 1 hour fair value gaps. So you could say to yourself, okay, we can target here. And that could be maybe our target for the day right there. And you can even say, okay, well, maybe we can go into this 1 hour gap. And then another thing you can do is use it for retracements. So like, I swear I thought we did today. I thought we retraced into like a 1 hour gap today and then continued downwards. But maybe that was the 4 hour. So yeah, that was the 4 hour. So I'm just going to go back to the 4 hour. You can see, you can also use it for retracements. So like here we swept out the previous 4 hour highs, traded back up here. And then since we're still bearish on the day, probably we can say, okay, well, after here, we can continue lower, which I think we did. So then let's go on to the 15-minute now. So the 15-minute, again, I like using it for manipulation after market open. So like here, I mean, some people would classify this as an order block. You can see like we manipulate into here. There's this fair value gap right here. We did not, oh no, that's a volume imbalance at the low. So yeah, you see we went right into there and then rejected. So 15-minute is really good for retracements. 15-minute lows are also really good draws on liquidity, especially if you're taking trades on lower time frame. So if you're like trading on the 1 minute, you can use a 15-minute as a draw on liquidity. So like this 15-minute low right here. If you wanted to short from wherever, you can use that as a target. And the 5-minute and 1 minute is where we want to make executions. So if we actually want to enter a trade, we would ideally use these time frames. So like right here, if we go on the 15-minute, let's say, okay, let's just say we swept these lows. And then if you want to look for an entry, you can scale down to the 5-minute and then look for whatever entry model. So like a fair value gap or change in state of delivery or whatever. Yeah, 15-minute, I also love. 15-minute is my favorite because it's not too high of a time frame, and it kind of shows you more than the 1 hour and 4 hour do. So it is really good for draws on liquidity. And then the 1 minute is where I personally take my executions. So for example, you look at this sweep, but the one thing about the 1 minute is that there is a little bit more noise. So like if you're in a trade, you can see price like forming a candle. It looks like it's going against your trade. So like right here, see how we were bullish? But then if you go on the 5-minute, it looks like it's just a straight rip up. But on the 1 minute, it looks a little bit more choppy. So that is one, I'd say, downside about the 1 minute. It can kind of mess with your head, but it is a very good time frame to take executions off of because it's very precise. So again, if you're anticipating like a reversal off here, then, or even like here after, because we did make a new low, and then you could have found an entry within here. So I was looking at this one today. I didn't take it, but there was this fair value gap. And then see, we react off of it and then continue much higher, trade towards this gap. What gap was that? That was the 15-minute gap, yeah. We trade up to a 15-minute gap and then we reverse. So that's how you can use the time frames. Remember, just start from high time frame, build that narrative, like 1 hour, 4 hour PD raise, 15-minute draws on liquidity, and then an entry on the 5-minute or the 1 minute. And that's how I would use the time frames. And that's all that there is to this lecture. Just a quick tutorial how to use time frames. It confused me a lot at the beginning because I didn't know how to use them. So hopefully this saves you some of the struggles dealing with that. And that's about it for this lecture.